Mr. Ndumiso Radebe, Chief Executive Officer of KH Research Equity. Take us away, please, my brother, and thank you so much for being here on time.
Thank you very much. Thank you very much. Your Excellencies, distinguished guests, colleagues and friends, a very good afternoon to you all. My name is Ndumiso Radebe, as the program director has just highlighted, and I have the great pleasure of moderating what I think is certainly one of the central discussions of this year's summit. There's a Japanese saying that I found quite recently that goes to the effect of saying that the future does not exist, it's only a future of probabilities that exist. So I guess in this instance, the future that we're creating in terms of the future of African critical minerals is really dependent on how this conversation is framed and some of the solutions that come out of that. But I have the great pleasure of having an expert panel that will be really making these contributions here this afternoon. And joining me for this conversation, I would like to welcome on stage Shirley Weber, who is the Head of Natural Resources and Energy from ABSA. Can we please give her a warm round of applause? You can choose any seat there, Shirley. I think from the second one, you can elect there. Joining Shirley is Patricia Kula-Fester, who's the Head of Primary Markets from the Johannesburg Stock Exchange. Can we please give her a warm round of applause? And then joining them is Vusi Dube, who is the Business Development Manager in Mining and Metals at the Industrial Development Corporation. Can we please give Vusi a warm round of applause, please? You can take this seat, I guess. Wonderful. Panelists, thank you so much for making the time for this very important conversation at this year's African Critical Minerals Summit. I think it has come out quite strongly in terms of the important role of financing to really realize the growth potential that exists in terms of critical minerals on the African continent. I guess as we started the conversation, the African Development Bank came out with an interesting number talking about that 10% of projects on the African continent reach financial close. So there's a big gap for the conceptualization and actually the execution of projects. And I think our panelists here this afternoon are really going to assist us in terms of some of the themes and some of the areas to do so. But perhaps let me start with you, Patricia. As part of the opening remarks, what are some of the opportunities and the significance and I guess the role of financial institutions that you see on the African continent in relation to critical minerals?
Thank you very much and great to be here. So I've got the pleasure of representing the Johannesburg Stock Exchange, and I think in context of that, the role that exchanges can play on the African continent is access to funding. Of course, you've got to mirror it in terms of what investors are looking for in terms of de-risking of the project. So, of course, access to funding via listing is definitely one of those avenues that are available for companies out there, but just also more broadly from a sustainability perspective. There's been a lot of work being done on the sustainability segment globally. In fact, the JSE was the first one to launch green bonds. And these types of instruments and development of instruments are essentially a key player in unlocking critical minerals in South Africa and in Africa, of course. So the stock exchanges, I think globally and also across African continents, have got the role to play in terms of their convening power to develop products that are well suited for companies, well suited for mining exploration companies to really facilitate that growth. But also, profile and visibility. We've got two companies, Errol, who just presented from Orion. We've got Copper 360, Jan Nelson, which are mining companies that operate in South Africa. They use the profile of the JSE to raise capital, but secondly, when they go trot the globe to find additional capital, they are not only promoting South Africa in terms of what they're doing, but also their projects. So financial institutions and exchanges in particular have also got the opportunity to profile projects across the African continent more broadly.
Thank you for that, Shirley. I think it certainly gives an interesting perspective from a stock exchange point of view in terms of your role and the opportunities that exist there. Patricia, pardon me, because I'm moving on to Shirley. Shirley, I understand that you travel quite a lot given your work. And I guess from an ABSA perspective, it would be interesting to really understand what do you see being the role of financial institutions to really unlock investment opportunities in critical minerals on the continent?
Yeah, thanks, and good afternoon, everyone. I think for ABSA as a bank, because we are spread all over Africa in many African countries, we're not just looking after South Africa anymore, we're actually looking after the continent, which is important for us. And as a financial institution, we all realize, and you've said it, and maybe I'm just repeating it in different words, that capital will follow sustainability ultimately. So what we then look at for South Africa and Africa is not just your usual suspects, on platinum and copper and gold, because anyone is willing to finance those, because it's very easy to go and get the price of those metals, and there's exchanges, and an ounce can only be an ounce, for example. So what we've embarked on for the last 18, 24 months is to make sure that if we are specifically going to look after Africa from a sustainability point of view, we need diversification happening. And diversification means we have to look at one, and I know this is not a power conference, but alternative power. And if we are all very supportive on, for example, renewables projects, how can we not finance the inputs that's going into the wind turbine, into the solar panels and things like that? So what we are focusing on, apart from our usual day jobs, is to look at those minerals where we need to make sure that we look after our African countries by supporting the newer projects that's coming on board. And it's actually spread all over Africa. Central parts have got lithium, the east have got graphite, the west have got, obviously more copper. So we are going to focus on that as well to make that, and we are currently making it part of our portfolio for financing, because we've got that responsibility and commitment to the continent. I think I like what Errol said earlier. The beneficiation part is definitely a big thing that's missing, that our various governments in the African countries should actually focus on, because that will help economic growth, it will help the people, it will serve communities, and it will all lift everyone up. So that's what we are doing as a financial institution. Thanks.
Thanks for that, Shirley. And I guess it segues quite nicely, given some of the key points that you've mentioned, to Vusi from the Industrial Development Corporation perspective. What then do you see the role of financial institutions, and given that you're also a DFI, in really accelerating the efforts to grow the critical minerals on the African continent?
Yeah, the role is quite big and is quite critical. Without strong financial institution, it would be very difficult to industrialize the country. It would be very difficult to bring on board all these mineral projects that we're talking about. So financing is key. Financial capital does follow good projects. But at the IDC, we don't only wait and for good projects to try and follow them and allocate that capital. We also attempt with various degrees of success to also be alongside good projects, take the risk alongside them. So we primarily focus as the IDC in terms of our financing capacity, to support the junior miners, the emerging miners, so all the entrepreneurs who wants to bring on board these new and important minerals that would be very important for the future to supply various markets. Yeah, so we try and play that role as a financial institution. So we are a development financing institution. We are 100% owned by the South African government. So by the nature of who we are, being a DFI, we do have the capacity to take more risk with the project promoters to develop projects. So as I'm saying, that our role is quite critical. The entrepreneurs, the project developers, they can identify good projects that can mine, produce the minerals that the world requires. But without the right or without a strong capital market behind them, then they have, of course, trouble bringing these projects into fruition. As we have mentioned that DPSA indicates that only about 10% of project reach financial closure. So I mean there are many reasons that will lead to that outcome. So, but it also highlights the role that the financial institutions that are playing or need to play, because without it, then the situation will even be more dire. So like I said, we try because of who we are, to support mostly junior miners. I mean, like the project that the CEO of Royal Minerals just presented here, their copper project in the Northern Cape, for example. So again, it's junior miners who have far more risk appetite and who are very resourceful and enterprising, who are willing now to bring on board these new projects that are required to produce the minerals of the future. So again, we're there also to support him. I mean, it's not easy, of course, there's always challenges. I'm sure he would have wanted, more money, more quicker from us. So hopefully we'll get there soon. But at least we are there, and as I'm saying that, I mean, without financial institution, then we won't be able to bring this project, on board. So our role is quite critical. It's quite big. So we are aware of it, and we are capacitating ourselves to make sure that even with the critical minerals that we're talking about today, that when financing is required to bring this project on board, that we'll be able to have the financial capacity to support the industry, to bring the projects online.
I guess then it's quite clear. Patricia?
Yeah. I just wanted to add one point, is that us as financial institutions should not be seen in isolation. There are different stages of projects that are fundable by one institution and then most likely would be fundable by another type of investor, for example. So I think we all have a role to play to take a company from junior exploration up the value curve to bankable feasibility, and then ultimately grow them to a global major one day.
And I guess then, Patricia, to your point, in your observation, what are then some of the factors that you've seen that either make it attractive or pose challenges to really drive increased investments in terms of critical minerals on the continent?
Yeah, so I think in mining in general, I think we have had a couple of panelists and speakers that have mentioned the challenges. You can think of yourself as an investor. What would make you invest ultimately in a mining company or a junior exploration company, irrespective of what the mineral is? Sure, certain commodities have got certain prices, but I think, infrastructure challenges in terms of transportation, we know that is a headwind in South Africa, particularly around that. Electricity supply constraints, there's definitely a lot of challenges in South Africa around that. And of course, availability of risk capital. So if you take away the headwinds, let's say it's a perfect environment, how do you then incentivize that risk capital to actually invest in these junior exploration companies? For us, we have collaborated with the DMRE, with the Minerals Council, with the Council of Geosciences to say, let's look at these further incentives. We've got a junior exploration fund. What else can we do to make sure that South Africa and South African mining companies are a lot more attractive to potential investors out there? And for us, similar to what Toronto and Australia done, is the flow-through share model. Over and above the product creation in terms of green and sustainability and project bonds and all those things that you can do, you need ultimately some kind of an investment or a catalyst to actually get more investment in there. So the challenges for me more broadly is, I think, infrastructure in terms of transportation, the availability of risk capital, which has been quite well noted, and of course delays in any regulatory approvals that one may find. And I think these are typical factors that would place some concern in potential investors.
That's an interesting point, because then it also has an effect, surely, on an area that has been highlighted quite a lot today around beneficiation or local value addition. Are there ways in which financial institutions can play a role in terms of how the question of beneficiation is thought about or executed? I don't know what your perspectives might be on that point.
Yeah, I'd like to maybe just start with the actual project itself, if I may, because in Africa, what we are sitting with is a lot of ore bodies that we need to develop it. So, and the question is then linking in with what Patricia said, there are challenges, because sometimes it's an ore body that is good enough, but it's a junior miner and that needs funding, but it's one ore body only. So maybe how we can assist, for example, with if equity is needed, because equity obviously becomes an important question as well, how can we maybe assist in bringing some of that equity to the party, not necessarily as a financial institution, but we know many funds that's willing to invest, you know, from all over the world into Africa. And we're not asking anyone to give the ore body away, but it becomes a strategic partner to invest and help with the start of that development. We obviously would come in with financing as a financial institution, and at that point in time, the beneficiation strategy should actually be quite clear. Because to put up a mine and a project, bring all the infrastructure to it, like electricity, you know, like movement, maybe if it needs to go to a port and railways, it becomes quite a big expense. So is there a roadmap for any of these projects that over time, instead of exporting the ore body, that it can actually remain and being built, you know, or being smelted or processed or whatever the case might be within the boundaries of the country? I think that is something that we need to look at the beginning of the project. So, and if the project is big enough, bringing beneficiation into it just makes it easier for us as well, because then the whole costing structures of the project, the beneficiation before it gets exported, becomes then within that boundary of the country, and it's easy. I think for us as a bank, we would look at that. We look at it very carefully. We have got in-country support. And for me, some of the challenges is the political stability in our African countries. I think that's something that every government in every country should look at to make sure the rules of engagement is very clear from one election to another. That must be clear, because if we can establish certainty for within the boundaries of the country, that makes investment so much easier. And if it's a critical mineral, and we've all seen what the world needs, and last week is a good example, we've got the means. We need to put those things in place, and it includes beneficiation. Put the rules down, and everyone knows what we are dealing with.
Valid point, Shodin. And Vusi, seems like there's an ecosystem that then needs to support this. The financing is a critical part. The questions of beneficiation are quite key. Infrastructure development has been mentioned as well, and especially on the continent, where 16 countries on the continent are landlocked. What then can be the potential role of financial institutions, or even DFIs in this instance, to really improve that situation, to better facilitate trade and investment in relation to critical minerals? Are there ways in which DFIs, in your particular case, can play in that role?
Yeah, I think when it comes to beneficiation, because I think as a starting point is, yes, we all agree that just mining the ore, you know, and exporting it raw. Yes, I mean, while we, as a country, we're making money, earning, export earnings, foreign currency into the country. But we can earn, a lot more if we were to beneficiate some of these minerals and sell a more higher value, added product. But when it comes to beneficiation, I think that the financing, because as financiers, especially ourselves as a DFI, we are more than ready to fund beneficiation projects. In fact, we are so keen to fund beneficiation projects. So I think when it comes to beneficiation, before we even get to the financing, there's one or two other key elements that needs to be in place, for beneficiation. Because remember that we fund, projects that are viable, because the capital that we invest, it needs to come back. So we need to, assess the viability of the project to assess, how can it return this capital. So when it comes to beneficiation, other critical elements that needs to be in place, it's skills development and training, because we'll require South Africans, to do the actual beneficiation. Yeah, I think it's not going to help us that much if we're going to rely on, foreigners to come here and beneficiate for us. They probably won't want to. Maybe that's why it's not happening now. So skills development and training is, it's quite key, because beneficiation projects are, you're talking now about, mineral processing. So it's metallurgy, it's chemistry, it's technology. So we require highly skilled, citizens who can come up with, technologies, who can have the know-how of how to beneficiate our own, minerals. So that would be one of those, key things. That must come first before even financing comes in. Yeah, and then the other one that maybe I can also mention is that, to set up beneficiation infrastructure, facilities, it requires, large capital investments. Yeah, these facilities are quite expensive. Yeah, so as a country, as South Africa, in terms of the available, capital, from savings, either from us as DFIs, from savings from the banks, will be, quite challenged to finance these beneficiation facilities on our own. So again, then we need to be able as a country to also attract foreign direct investments, capital from offshore, to come and also, support the funding of the beneficiation. So I think once these elements are in place, and we start having then a cohort of South Africans who are coming to us, as financiers, with beneficiation projects, and they present to us, and we can see that, there is strong economic merit here on this project. Yeah, we are more than ready to fund them. If the capital is too large, we can't fund it on our own. We do have the capability to syndicate, even with external, international funders, we can help to bring, that funding into the country to finance these things. Yeah, so I think it's also key to also look it along these lines, just holistically.
Go ahead, Shirley.
No, I just want to say, Vusi, I agree with you, but what I would like to see on the continent, that it's the African banks actually coming together to finance projects as well. We've got so many stock exchanges all over Africa. We've got so many financial institutions over Africa. We've got, our local DFIs as well. Africa for Africa, that's what we would like to see as well going forward. I know there would be instances, especially in certain markets where we have to bring in international funders, etc. And I think the Libido corridor is a good example where we've seen what is happening. Yeah. But we would like to see, more local, because that will help everyone on the African continent. So it's my 2 cents worth.
Valid point there, Shirley. Thanks for that. And I would wish, given that it has come up quite a lot in the summit today, the question of skills and the question of expertise and capacity building. The previous panel, I believe it's Mr. Mabuza from the Council of Geoscience, mentioned an important area around leveraging geological instruments to reduce risk when it comes to projects. So I then wonder is there an opportunity there from a financing point of view in its various structures to speak to that? And I guess, Vusi, from a DFI point of view, and I'll then wish to hear from yourself, Shirley and Patricia as well, in respect of that particular point, which is generally pre-feasibility, bankability, studies and so forth, that specific gap there. Is there space in which financial institutions can play in really increasing the quality of the pipeline of the projects so that ultimately we can see those top-line numbers in the near future? Vusi?
Yes. I mean, the geotechnical risk, it's higher at the early stages of, mining project developments. Project preparation stages, while, pre-feasibility, all the way to bankable feasibility. So that's why that risk is higher, and of course, I mean, as financiers, our expertise it's more financing. So that's where again our collaboration with other industry experts, such as the Council of Geoscience itself, as well. If we can, find a more, coordinated, harmonized way of collaborating and working together, so that we can be able then to understand these geotechnical risk, and if they are understood properly and understood by the right people, then the risk is reduced. That's how you mitigate it. So there could be opportunities to do, far more project development in this country if some of these, early stage projects that are deemed to be, high risk, because as we're saying that the geology, etc., those type of risks are not yet fully understood for one reason or the other. Maybe we haven't done enough exploration, we haven't done enough mapping, those sort of things. So if we can be able, to find in a way, a way where all these key stakeholders can collaborate together and reduce this technical risk as an example. Then it makes it then, I suppose, much easier, to finance projects if the risks are well understood and they are well mitigated. So there could be opportunities to do more if we can just find a way to, to unbottle these issues.
To certainly unlock that. Shirley, what are your thoughts around that specific area to be able to unlock some of these investments?
So we definitely finance greenfields, brownfields, and obviously operating mines. There's no doubt in our minds about that. The pre-feasibility, in other words, we're talking about, going back to exploration then, is quite difficult for financial institutions to do, because it's the facts are not there yet completely, and if it was our own money that we dealt with, then it became a different discussion. But the reality is we're custodians of all of your monies in the bank, so we need to make sure that we also protect that. So we follow pre-feasibility projects on the African continent in all the various countries. We do that, and we look out for that. But pre and exploration is very difficult for all financial institutions unless there's a specific area or fund or division that's there. But in our market where I'm currently sitting, I don't think I can actually even give an example. So that maybe is just the opening line. Hence me mentioning earlier about the need for investing into projects. We've got access, to people who would like to get investment, and not 100% investment, a 10%, a 15%. Maybe they need your ore to go into their processing, etc. That becomes a very different discussion from a strategic partner point of view. So that type of thing we can absolutely facilitate. But exploration is very difficult for financial institutions.
Indeed. Patricia, I don't know if you have perspectives there, because you did mention a very important point earlier on, to look at financing based on the fit, right, of the various stages of projects. I wonder on this specific one, what your perspectives might be on it,
So what is our fit as a JSE? We service the large institutions. So these are the financial institutions which typically their comfort zone is bankable feasibility in terms of investability of new projects. A portion of the JSE trade is done by retail investors, which are you and I, people that want to take a punt on a particular commodity or a particular company, or perhaps management for that matter. So financing pre-feasibility, in fact, globally on most exchanges, has become a lot more difficult. It's not just a South African issue, it is a global phenomenon. So again, funding those companies early on does prove to be a challenge. I mean, the JSE has diversified into a JSE private placement market, which has got about 15 billion rand worth of dry powder on the platform. But those are also pension funds, DFIs, and institutions that would require bankable feasibility. So we do need other initiatives, other types of funds that would come in and de-risk some of those projects early on, or like I mentioned, some form of an incentive to actually ensure that people feel a little bit more comfortable in making riskier investment choices, because there's some kind of a tax rebate or some kind of a benefit that is in line for me when I make those investments. So on the JSE, our market that we service are the financial institutions, similar to ABSA, which does make it difficult pre-feasibility. It means that it can't be done. It definitely can be done, but those cases are definitely few and far between.
Indeed, I can certainly imagine that. Shirley, to that point?
I just wanted to mention, so in the entire value chain, if you look at from pre to where you ultimately get an end product, we believe that we can play a role right through. In beneficiation, we've spoken about it, so I'm not going to repeat it, but the supporting the chain for procurement, for example, there. For us, that's an enterprise supply development line that we are actively involved in. And if we have mines that we finance, small or big mines, we're very willing to go in there and see how we can support the chain, after the ore, or the input into processing the ore, or even mining the ore. So in my world, things like not just the mining project, but the contractors into the mining project. We have people looking after who's supplying the contractor to do the contracting, if you hear what I'm saying.
Yes.
So all of those aspects are actually very important in making sure that this chain work. That's just an additional thing I think that everyone should be looking out for.
So then, to that point, earlier this morning, there was a point around having an African vision in relation to critical minerals. Say we walk away day one of the summit this year, and we're saying, here's the vision for critical minerals in Africa. What are some of the financing models, based on your experiences, that you have found actually make financing projects seamless? What are the best case scenarios that you've seen that when certain things are in place, it makes it easier to finance some of these projects? Because I think then there might be an opportunity to try and project prepare to create those kinds of scenarios. But I wonder, Shirley, from your perspective, and I guess yourself, Vusi, as well, from the projects that you've seen, which are the type of projects that have made it easier to finance, especially in the context of critical minerals?
One, we believe in the critical minerals. There's a wide spectrum of those commodities. But I think, firstly, the geography, very important for us. We've seen in many of the East African countries that there's a lot of activity, but there's also a lot of difficulty on the FX side. As well.
Yes.
So, if a country is good, and we know all of our minerals are in dollars, it goes out as a dollar price, and if there's issues on things like currency stability as well, that also is a problem, or if there's no access to currency. So geography for me is very important. The commodity itself also plays a role. None of these critical minerals, bar maybe copper and nickel, etc., can be hedged. So how do we deal with that risk management of the actual price?
Yeah.
If you look at lithium, any ore body can have multiple types of grades of, for example. So how do we manage that? So the commodity itself also plays a role. And believe me, we work through the pre-feasibility and the feasibility studies, etc. I think the other point is also the sponsor involvement. We have to make sure the ESG side, that's self-explanatory, but also what happens with the community around it, that's important for us as well. So there's a few aspects that we have to, and obviously, where does it go to ultimately? Because we all have the responsibility to check as well who's the off-taker, where it goes, take into consideration that we've just gone through a war. So what is happening there as well? So a few things that we have to look at when we do those projects, but we have to buy into management as well. So, so I've mentioned a few things, but those are the broad
Key things that
Yeah.
make it easier. Vusi?
Yeah, I mean, the critical minerals that we already mining here in South
Yeah.
Africa, because we do mine quite a number of them. You know, we're a supplier to the global market. So those ones, you know, we've funded quite a number of them. So there, we've used the conventional corporate financing, models. And we'll probably maybe gonna continue to follow the type of corporate financing model to fund, mining projects that wants to produce critical minerals here in South Africa. I think where we need to come up with innovative financing instruments or model is now when we're going to the other African countries, because we don't really have much experience there, because we haven't, funded, a significant number of projects. And again, I mean, some of these critical minerals became critical just now, recently. Lithium is, became the flavor of the month just recently, graphites, etc. So for the past decades, I mean, we haven't really funded lithium projects, as an example. And most of these now, viable projects that are quite attractive, that every investor now is in the other African markets. I mean, the East Africa, graphite is there. Lithium, Zimbabwe, as the Zimbabwe, ministerial officials were here. They've got quite, interesting and very large, lithium projects. Cobalt is in the DRC. We don't have it here. So since also, I mean, as an IDC, we do have a vision, a plan, to unlock the critical minerals, both for the country as well as for the continent, to make sure that, we don't get left behind, that we try and optimize value for these things. So as part of that vision, so we are also still working on the financing models for, what instruments that we can use, to participate in the funding of these critical minerals I've just mentioned. For example, graphite in the eastern, in East Africa. So we've got a team that's looking at those projects and how best they can be, funded. DRC as well. We've started. We were there in the DRC just recently. Again, looking at what opportunities are there and how can we fund. If the conventional corporate finance models that we currently have, are not optimal to finance these projects that are in other countries, that's where, as I'm saying, that we need to come up with new, innovative ways of how we can find. We haven't found the silver bullet yet, but I mean, we've got a department within the IDC, it's, a project development department, as well as, industry planning. So they are spending quite doing a lot of work, in researching, as well as evaluating some of these projects that are in other countries, as well as, coming up with ways that, the IDC can fund these projects. Do we take equity? Do we provide mezzanine type financing or straight project finance type loans? So these are all the sort of things that we're looking at. So hopefully very soon we will find, a niche way to finance this project in such a way that, it can be a win-win for everyone. Us as financiers, as well as the project promoters and the countries where these projects are located.
Yes,
I
sure.
just wanted to add, we've definitely seen a change in the market over the last 2 to 3, 4 years. And I think COVID obviously just accelerated it,
Yeah.
is the commodity traders, also sitting in our team space, is definitely a lot more active in the offtakes for some of these projects. So apart from, Vusi, everything that you've mentioned, corporate finance, project finance, etc., there's an underlying for trade finance, structured trade and commodity finance. So there's a lot more activity in that market. So the movement of commodities, it's changing from just a pure off-taker to also intermediaries to make it an easier move. And all of us need to look at those changes as well in that specific chain.
Without a doubt, without a doubt. And Vusi, I hope you won't think that I'm trying to get you fired or anything of the sort. But perhaps just a bit of clarity around this exploration fund. If you can just provide high-level clarity, just so that we have an understanding as to where it is, just so that, yeah, for the purposes of this conversation, we would be able to know without being misdirected.
Yeah. I think maybe to provide, context. Mining projects, we fund from pre-feasibility, and then, yes, all the way to commissioning, building the mine and expansion. Traditionally, that's the role that the IDC, has been playing in the financing of mining and metals, projects in this country. In the main, this funding range, came about as a function of our mandate. I mean, our mandate as IDC comes from an act of parliament. So what comes before pre-feasibility is exploration. So within our mandate, then exploration was excluded for one reason or the other. So in a sense, that's the context that, as the IDC, we haven't really been participating in exploration. So of course, as it has been mentioned by the previous panelists from early in the morning, as well as the panelist that was here with the Council of Geoscience, there is a large gap in terms of exploration funding in this country. I mean, there were stats or graph that was presented earlier on by the President of the Minerals Council, where he showed the exploration spend in South Africa has been, or in Africa has been declining, but in South Africa has been declining even more so. That I think today is less than 1% of the total global exploration spend. It used to be around 5%. So that's the extent of the drop. So this highlights that there's a gap when it comes to exploration, funding. So mostly exploration here in South Africa has been funded either by the large mining houses who are funding their own project, their own exploration, and to a smaller extent, there's international junior miners, mainly Canadian juniors, who had the appetite or the risk appetite to venture into our shores here to come and do exploration. So this little bit of exploration has been largely, funded by those entities. So where there is a gap is, it's of course mainly South Africans who wants to explore, don't have their own capital, don't have the balance sheet, that's where the gap is. And then of course, junior miners who also wants to explore in order to grow their portfolios. Yeah, so that's where the gap is. So exploration essentially, it's when you're still searching for the minerals, so it's prior to discovery. So because this gap is growing, the exploration spend is declining in this country. So then there was a view that maybe, the IDC needs to also try and come up with with solutions, options to fund, exploration. So in a sense now our mandate then is being extended,
Okay.
So that then we can come up with solution to fund, exploration. So we are currently working together with our key stakeholders, the Department of Minerals and Energy, the Council for Geoscience, and to a certain extent the mining industry itself. because they're also going to participate in this fund one way or the other. I think either through their enterprise development, funding if they have. So the workings of the fund, so there is some work that has been put into it. So it is quite advanced. Yeah, it's close to final approvals now, credit approvals. So it's more going to be like, the governance structure is going to be more of a tripartite governance structure between ourselves, IDC, the Department of Mineral Resources and Energy, and the Council of Geoscience. And mainly the reason being each stakeholder is playing its key role. We are a financing institution, so mostly our role will be to make the funds, the funding available. And then the other, stakeholders will assist with, the assessing of where to explore. Because as the CEO of Geoscience was explaining here, when it comes to exploration, the key is having that geotechnical expertise know-how, so that you can know where to go and explore. Because if you don't know, then you're going to waste the money. So that will be their key role, is to provide that technical expertise. So we hope that quite soon the fund will be live. It's not live yet. So the initial thinking now is to raise about 500 million rands, say, as the first phase of this fund. So then once it is live, then hopefully that capital can be deployed to the explorers, and then we'll take it from there. So the next steps or the next phase, hopefully then the funding would be much higher than that. If importantly, if this first phase goes very well. So that's where the thinking, and that's where it is right now.
Thank you very much. I think you've heard it from the host himself. It's at an advanced stage, and this is ongoing work to really support that project preparation and obviously feasibility and bankability of projects going forward. Patricia, I was quite intrigued by how you deliberately framed ensuring that we need to look at financing through the purpose-fit question, right? And I guess when we look at it from the access to capital theme, and together with the role of public-private partnerships, and what you also mentioned around the convening power that you have as a stock exchange, those three themes there, when it comes to access to capital, are there ways in which they can be leveraged to really optimize the unlocking of these investments?
No, I think definitely. Again, the JSE plays a role in terms of access to finance through the various asset classes, and I think in this particular case it would be equity and fixed income. Public-private partnerships, in terms of the funding of those, the question is, what can one do to actually innovate and actually bring more of this type of funding to some kind of an infrastructure type funding onto the exchange? So, for example, the JSE does have project bonds available, which would of course lend itself quite well to some of the projects, but also more broadly infrastructure funding. So infrastructure projects, we are currently working on a framework for infrastructure REITs, which typically speaks to the telcos, but essentially it's any long-term asset class which obviously yields some kind of a rental income that can be then bucketed into a product, which is something like a infrastructure REIT. Of course, we've had that in the property space. So I think from our side, we have, of course, looking at various products, various developments, various options in terms of pooling of assets, whether it's securitization, whether it's particular infrastructure funds, and how we can actually mobilize that access to capital. I'm getting nervous because our moderator went on stage, so I lost my trail of thought there.
Indeed, I think it's probably on the test of time. How much time do you perhaps? Time is up. Can we take a question, perhaps? No, that is fine. I guess it would have been great to have a question or two. But ladies and gentlemen, thank you so much to our esteemed panelists that have really made meaningful contributions to this all-important discussion. It's truly appreciated. We trust that if you have any further questions or conversations that you want to take further, our esteemed panelist is indeed available, and you can have those conversations on the sideline of this summit. Ladies and gentlemen, can we please give them a warm round of applause?
Bye.